right, how's it going, everybody? This is Anon. This is the Retail Collective and the truth about BBBY's latest filing and what you kind of need to understand. And so I'm doing this kind of like with a heavy heart because I really wanted BBBY to squeeze. And though after kind of researching and spending a lot of time talking to people who actually really understand this stuff, it's going to be an interesting little DD for you. So let's just dive right in. So I was talking to Dilution Tracker. This is a website I use, and I posed a question for them, which is kind of like, "What's your take on this? What do you see?" And I kind of explained to them what I thought the filings meant, and they kind of Sean from there quickly let me know that how this kind of works, and I'll kind of go over this. So right now, just to give you kind of a backstory, obviously everybody knows that BBBY is heavily shorted. I've got the Ortex here for you. You can see they're on the threshold list. Everybody's been really, really excited. Close to half the floats, shorted right now. Thing looks like it's going to go to the moon. But what's happened is recently they just did a filing, and this filing was basically so that they can raise enough money to basically keep the doors open and unfortunately what they did was they gave away the entire bank. So here's the deal. You had 117 million shares outstanding right now. You had an ATM that had 40 million left on it, but they just gave out, I mean, if you look at these warrants here, that's 400 almost 69 million warrants, and convertibles they gave 100 million. So that's a lot of dilution. I mean, you're talking about a stock that literally had 117, and now you're looking at close to, that would be almost 700 million shares outstanding. So they would 7x the float, or a little bit under 7x the float. So that's a huge amount of dilution that's on the table. And it's basically, they gave them that because they had no other choice. That at this point right now, they need cash so badly to basically make sure that they don't default, that they were willing to basically give up everything. So here's the way it works, right? Remember when Dr. Burry, I think he tweeted out, tweeted out Dr. Burry, Cassandra, right? Cassandra, whatever. What is his thing? Sorry. There it is. Remember he was talking about the meme people, or he basically was like, meme people are going to find out about, I think somebody put the, here, you know what? Let me do this. I saw it recently about Burryism, but basically he was like, meme stores are going to find out about death spiral convertibles, and everybody was like, "Oh, what does this guy mean?" So I dove into it, and that's what I was talking to Dilution Tracker about. And so what's happened is they issued out these convertibles, right? And these convertibles are like toxic because the way this works is they have a formula in here, and basically they have a built-in 8%, like every time they convert one of these, they're making 8% no matter what. So what ends up happening then is when you start doing this, they basically put a floor in here at 71 cents. And what they're able to do is the lower they can get the share price, the more they get to convert. And if they convert on every single one of them and they make the 8%, they're going to make a ton of money the lower the stock price gets. Now, I don't think that means it's going to go down just right away. I think what they're going to do is they're going to hammer this up and down and get retail to, because what they're looking for is the volume. They want to get people excited, people to FOMO in, and they're going to dilute down on every one of those spikes when the volume picks up, and that way they can kind of keep the stock where they want, and they have the full control because they have all of this dilution. and this sucks, and I hate that it went this way, but I don't think BBBY had any other choice, because I don't think there were lenders lining up down the doors. And so I don't know if, Hudson Bay was the one that approached them or they approached Hudson, but somehow they worked out these really, so this is very favorable for Hudson and the underwriters. Like, this is not good for the company as far as long term, it keeps them alive. So yes, it's good for the company, but short term for the squeeze, this is really bad, because what basically happened was everybody was talking about, oh, this thing's on Reg SHO. We've got 50 million shares that are shorted plus all the nakeds. Well, guess what? They just gave 700 million shares of dilution to these like hedge funds. And who's to say that Hudson Bay and these other people that are taking these preferred shares aren't the ones shorting them? Because you don't have to report a short position, right? All you have to do is make sure you file the things you have to file, but shorts don't get reported. So we don't know who's short BBBY. And the fact that these guys step forward and want all these things maybe makes me think that now they have all this dilution, they can basically find every locate. It's going to go off of Reg SHO eventually when they start diluting, and it's going to kill the squeeze. And so long term, the company's alive for the meantime, but they gave up so much in dilution to basically, stay alive. And so that means essentially that, sure, long term, if the company can turn it around, then, but they're going to have so many shares outstanding at this point right now. I mean, this is a company that literally did a share buyback, and then, months later is now going to have to dilute so much. And so here's part of the problem, right? Part of the problem is, here's the SEC Reg SHO rules, and they actually state in here that they're supposed to close these things after 13 consecutive days. They will, require a closeout position, blah, 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 blah. They never enforce this. I've been in so many squeeze stocks that are on Reg SHO for like a month and a half, 2 months, and they never enforce this rule. And I don't know. I've written the SEC. They had the SEC contact me back. I brought this up. I'm like, why isn't this being enforced? And they didn't give me any answer. The one time they actually did get back to me, they were like, oh, go ahead and send us your, whatever evidence you've gathered. I did that. Never heard anything back. And quickly after, the squeeze play fell apart, and then, you're back at square one, and you're going, if this was enforced, then yeah, these stocks would absolutely squeeze, but they never seem to enforce this rule, which sucks. So now you know that the Reg SHO is normally not enforced, even despite, I don't know if you guys know this, but Overstock was I believe they spent 666 straight consecutive days on Reg SHO. Now, granted, that's another time. This is years ago, but that is unbelievable that it went that long. And this is probably predates these rules being put in, but they don't enforce these rules. And that's what's so, that's why learning about this stuff and kind of educating yourself is super important, because it's going to let you know that even though this rule's in place, it doesn't actually mean they're going to enforce it. So now you know that. Now you also see that they have plenty of ammo to basically reset any FTD, failure to deliver, for anyone that's new. They have, and here's the thing. They had basically a non-compete for this. Remember, in the filing that you'll find, let me find it. In the filings for these things, they basically said that they're not going to be able to offer out any more shares for 90 days. And everyone thought that was bullish. But here's the thing. That basically gives these, whoever funds these are going to be, maybe Hudson Bay, whoever else joins in when they actually file these things. When they file them, they have free reign for 90 days with no competition, because BBBY is not going to be able to issue out any additional shares. So these guys are going to basically have free reign of the stock for basically 3 months. So that means they can't raise additional money. They're going to be raising money technically through this process, but it's nowhere. You're going to see a lot more dilution than you are going to see money going towards the company. And that's why this was super favorable for whoever bought these things, and not great for, the actual shareholders, because by the time some of these things, like say all of a sudden we jump to 250, 300 million shares outstanding, all those FTDs are going to be reset and there's going to be off Reg SHO, and the share price is going to be lower because the more dilution you have, the higher, the more shares. It's kind of like a pie, right? Like when you can slice up this, slices, but when you have only a certain amount of value, every time you slice up that slice, it's worth less. So that's going to push down the actual share price, right? So, I mean, when he talks about death spiral financing for, Cassandra, like Michael Burry, he's talking about the fact that this type of loan is basically toxic and is going to try to put Bed Bath and Beyond out of business because they're all of a sudden going to have all these millions and millions of shares floating out there. There's going to be a huge amount of liquidity, and if they drive down the price enough, eventually they're going to be able to, if they can't keep diluting like this over and over and over again. Like this is like a one-time shot to turn them around, and maybe they can turn around, and maybe that's fine. And if they do that, that's great. But it's going to take a really long time to be able to build up that equity again for those shareholders when you have potentially up to 700 million shares outstanding. I mean, BBBY would have to really turn around their business, right? So, I mean, that's why you haven't seen a ton of like shorting lately. Like, you had some higher days here, but for the most part, it's been about like 40% shorted to 50% shorted, which is kind of normal for like one of these meme squeeze stocks. Some other things to kind of realize is over the last 6 months, insiders have sold 107 million shares of BBBY, right? Like you can see they were buying in this area and they were all unloading in here when the squeeze happened. And then nobody's been buying it since then. Like you can see these are all sell orders. November sell, November sell. I mean, it's not like the end all be all, and I know that I've told people before, insiders, it's not always the indicator of what's going to happen, but like we're not seeing insiders buying at this point, and that's not a great thing long term. That means that there's nobody in the company that's like, yeah, these are good prices, let me go ahead and pile in. I'm hoping that someday we'll see that rise, but for right now, I mean, this is kind of scary to think about because it's like this company's really in bad shape. If you look at, right now, they're going to be raising a little bit more cash right now, but they had 166 million according to the dilution tracker, which at their current cash burn is not going to last them very long. It might last them 2 months, which is why they just did this, this filing, which is not favorable for them. So I kind of wrote some DD out, and I'll kind of share it with you guys. I mean, this is, going to be a quick overview, but I just showed you what this DD looks like on, on Dilution Tracker. But essentially what's happened is this. I know there's a big gap in how people understand and read these filings, which is why I went to Dilution Tracker and asked them, because I didn't know. I thought things were bullish at first when I read them, and then I started like deep diving, and then I had some questions, and I went to them, and they were like, this is how it all works. So essentially, somebody went to somebody and said, we need cash, and these guys said, sure. And they said, but we want these preferred shares. And they're able to basically drive down the price with this to get more shares converted. And then at that time, they can chop it all over the place. And, so off the bat, they get a discount of 5% on some of these, and then 8% on some of the, I think on the convertibles it's themselves, the convertible shares, the convertible warrants. I think they had a 5% discount on them, if I have that correct. Then on top of this, when these guys convert them over, they're going to be able to locate all the FTDs, get off Reg SHO, all that stuff. So they have a minimum, though. There is a floor, and so this is an important number to know. The 71.16, or it's basically $71. This particular number, you can round up to 72 if you want, is basically the floor. At that point, that's their like the bottom. They can still get value out of them. If it goes lower than that, then they don't. So that's essentially the floor for BBBY right now. It's going to be like 72 cents basically. But he basically gave me this example, which is if there was $2 million of convertible preferred left and the lowest VWAP, because this is why they want to drag down the price. Over the last 10 days was $2, they can convert over 108 million shares, right? But if the lowest value of the VWAP over the last day was $1 instead, that means they're going to be able to pull out 217 million shares to convert, which makes them a lot more money. So the lower the price for right now, the more shares these guys will get out of it profiting, which is basically an incentive to drive the price down. Now, I think they'll chop it, but I mean, this is not a great thing. So off the bat, these guys get like 8% off this formula, and that means they're making money no matter what the price is. So they have an incentive at this point right now to drive down the price. And, I just put out some of the screenshots there. And they're not only that, but these things all have price protection on them, right? So you can read through these. I'll put up a link in the Discord. But like, literally these things are price protected. And what you're going to end up finding on these things is they're all favorable for the hedge funds or whatever funds are buying these things. Not only that, but here's the deal, right? And people are like going to push back and go, well, you're pushing all this information out. How do you know they won't want to run the stock up? Well, you already saw that they want to basically get the price as low as they can by the end of it because they'll be able to convert more shares, which will make them more money, and they don't care what the price is. But then on the the other side is once they have all these things converted over, they can't go over 9.99%, right? But that's the thing. They're not going to go over that number because when they do this, they're going to do it through multiple different like things. It's not just one fund. They have like shell funds for other funds, and they've got their buddies doing this with them. So whenever they get to a point, they'll dump out and then they'll do it again. And this is what they did to Mullen. If you guys know Mullen Automotive, this is essentially Hudson Bay did the exact same thing to them, and they got hugely diluted. I can even just show you just to show where the dilution happened. Hudson basically, this is a stock that had literally like 23 million shares outstanding, and within like a second of Hudson touching them, they all of a sudden had 284 million shares, and now they are sitting on over a billion something shares that they're going to have outstanding. So, I mean, it's crazy. It's not these guys basically. This is what they do. They've got multiple assets or facets of their stuff, but this is one of the things, and it's. I don't like how all this works. The more you learn about it, it's like, ugh. So anyway, this is what they did to Mullen, and they drove down the price. To go on top of that, these warrants at 615. They're a hedge. In case they lose control, if retail FOMO's in like they did on GME, they have 95 million shares that they can hedge basically that, if the price goes over there, they can use the price protection and they'll be able to basically knock it down. So, and add more dilution at that level. So, and like I pointed out, that 90-day period, BBBY won't be able to issue any ATM. So even if they drive the price up, BBBY is not going to be able to take advantage of that, because they're the only game in town, if that's what you want to say. So I expect this to chop, and I expect it to get driven down at some point pretty low, probably near like $1. And I don't like this, how all this went down. Like, I know why BBBY did it, because they basically didn't have any choice, but you're just, at this point right now. Now, the one thing I will say is the merger would totally change all this, because this is all assuming that there is no merger coming. So I will point that out, that we don't know every piece that's going on right now, and I have read some of the DDs on BBBY sub on Reddit, and they have some really fascinating coincidences that kind of line up, and if they are true, then there's going to be a lot more different dynamics going on with all this. But for right now, I'm just assuming that there is no merger in the mix, and you can't the way I look at this is you can't sit there and say, hey, I'm banking all my hopes and dreams on maybe these guys are right and they found something, because what if they didn't? And if they didn't, then and you don't know the full story, then you're doing a lot to gamble at that point. And once this is all just my opinion. None of this is financial advice. This is just a guy that found this and is trying to share it, because I feel like nobody's actually putting out what this means, and I seem to be the only person that's actually talking about this, because it's easier to go with the flow and just be like, yeah, BBBY to the moon, like this thing's gonna squeeze. People want to hear that. Nobody wants to hear what the filings actually mean. And so I'm trying to at least bridge that gap. And maybe you can combine mine with somebody else's really good DD. But this is what I found, and I don't feel right not showing it or sharing it. Like, I was a Marine, so for a lot of you guys that know me, they know that to me this is important to share information and people can make educated decisions. And when people don't share the full thing, and maybe it's because they don't know it or they didn't understand it, but it basically gets into an echo chamber where you're sitting there and all you hear is positive reinforcement, and that makes you think that this is going to be your chance to become a multimillionaire off of a couple shares of the stock. And that's not how it works, especially when you start learning how all these different things fit together, and you find out that nobody actually enforces Reg SHO, and nobody actually cares about FTDs, and nothing's ever enforced. And not only that, but like, these hedge funds know what they're doing, and they typically they beat us, and even when they lost, they just got their prime brokers to shut down trading, so we couldn't win. Like, this whole system needs to get reformed. That's my honest opinion. But yeah, Dr. Burry is right. These preferred convertibles are not a good thing, and so I know that's going to make some people upset. But that guy is actually pretty smart. I'll tell you this. He's usually right. He is horrible on timing, though. Like, he had to wait like 2 years or something like that, paying like out the wazoo on margins and all this stuff to keep his positions open, because he was right. The market was going to close and be fall apart, the housing market, but at the same time he was like way early. And so his timing, often when he puts out like a tweet or something like that, like, his timing's not always like, eventually it probably will come true because he's a smart guy, but like in this case, like, when you put that out there, I know a bunch of people got upset, and here's the truth. He's actually right. Preferred convertibles are like terrible for a long-term shareholder, because you're going to get really diluted on. So I needed to share this information. I'm not going to sit here and blow smoke and rainbows. The stock can chop around. The stock absolutely can chop around, and you can see, if you know how to trade it, you're going to see a good amount of buying pressure and selling pressure. There's a huge gap to fill, but at the same time, what you're going to realize is this is a stock right now that's really volatile, and there's a lot of dilution coming. So as long as you know that, you can stay safe. Have the time of your life trading it. But at this point right now, you need to know at least what I told you. And for anyone that's interested, you're more than welcome to join our trading group. We do have a free Discord. I've always believed in, a bunch of retail traders getting together and just talking about stocks. We can argue goods and bads about things. And the whole idea behind the Retail Collective is that we have a bunch of really smart people that get together and we can just talk about stocks. And there's no ego, and it's, like, it's not me just talking to a bunch of people and telling them what to do. It's all of us working together, going over filings, like teaching each other things. I'm always learning. I just happen to be the voice that talks sometimes because, I don't know, a bunch of people insisted I started a YouTube channel, which, by the way, I make almost no money on. I do this essentially just because people wanted to hear, what was going on with, a couple stocks that we were talking about. So they basically voluntold me to do this, and so now here I am. So, if you want to join us, though, I'll leave a link in the descriptions below. And if you can give a like and subscribe, I guess, if you want to hear more things in the future. But we're on the Discord daily and every trading day, and even over the weekends, having fun and talking to each other. And so the idea is just to hopefully start a new. We've only been around for a year, so like a newish, like community. I think we're close to 4,000 members at this point. So come and join us if you want. It's free. There's never any pay thing. So there you go. You guys have a great morning, evening, wherever you are, afternoon. And I hope you found this helpful. And good luck out there, and be safe.